10th March explained India puts supply security first amid oil prices surge. Written by Sukalp Sharma. As the Iran war rages, crude oil prices jumped 30% early Monday to nearly $120 per barrel per barrel per barrel levels not seen since 2022. Prices retreated but still traded above $100 per barrel after reports indicated that G7 countries will be discussing a coordinated release of around 400 million barrels of crude oil from their strategic petroleum reserve to improve the supply situation. With the jump in oil prices, Asian stock markets tanked on Monday amid concerns of higher inflation and interest rates globally. In India, benchmark share market indices Nifty and Sensex were down nearly 3% in early trade on Monday. The rupee also fell to a new low against the dollar. Nifty and Sensex ended the day's trade down 1.7%. India's economy is vulnerable to oil price volatility. India's economy is vulnerable to the oil price volatility owing to its oil import dependency level of 88%. A heavy reliance on imported crude oil has a bearing on India's current account deficit, foreign exchange reserves, the rupee's exchange rate, and inflation rate, among others. But the immediate priority is to ensure crude oil and fuel availability on a continuous basis. The Hormuz disruption. Oil flows through the Strait of Hormuz have virtually stopped in recent days, with Iran warning vessels to not transit through the strait and even hitting a few vessels that were passing through. Most trading houses, insurers, and vessels loath to get involved in the prevailing extremely high risk environment. Seen as the most important oil transit choke point globally, the Strait of Hormuz, the narrow waterway between Iran and Oman that connects the Persian Gulf with the Gulf of Oman and the Arabian Sea, handles approximately one fifth of global liquid petroleum consumption and global liquefied natural gas (LNG). Around 15 million barrels of crude pass through it daily. While some existing pipelines in the Gulf states bypass it, their capacity is restricted. Even at full utilization, 9 million barrels per day of global. ठीक है. Around 2.5 million barrels per day of India's crude imports, about half of its total oil imports, have transited the strait in recent months. The longer term average is around 40%. This comes mainly from Iraq, Saudi Arabia, UAE, and Kuwait. With tankers unable to pass the strait, major West Asian oil producers are being forced to cut crude oil production as they are running thin on storage capacity. Iraq and Kuwait have already begun, and the UAE and Saudi Arabia could be next. Attacks on oil infrastructure in the region have raised concerns over potential supply outages, spooking the markets. Impact on India. Given that India imports 1.8 to 2 billion barrels of crude oil a year, every $1 per barrel increase in oil prices would bump up its oil import bill up to $2 billion on an annualized basis. Nomura report said that India is among the three most vulnerable Asian economies to high oil prices in terms of import bill and current account balance, besides Thailand and South Korea. It is said that every 10% oil price increase typically widens India's current account deficit by 0.4% of the GDP. Despite the spurt in international oil and fuel prices, there are no immediate plans for hiking petrol and diesel prices, which is in line with the government's policy of the past few years to keep pump prices stable, notwithstanding the volatility in international energy markets, according to sources. A continued freeze in pump prices is expected to blunt the inflationary impact. Petrol and diesel prices have effectively been flat since April 2022, with public sector oil retailers taking losses when global prices jump and recouping them when they fall. In its monthly economic review released Friday, the Ministry of Finance had pointed out that crude oil prices remaining above $100 per barrel, $100 per barrel could result in a strain on macroeconomic aggregates apart from crude oil as the obvious stress marker. The ministry also underlined that supplies of natural gas and cooking gas also matter. However, the ministry said given that India's inflation is near the lower bound, the impact on inflation is not estimated to be substantial at this point. According to government sources, Indian refiners are ramping up oil purchases from non Hormuz regions. They said that India's stocks of crude oil as well as diesel and petrol are increasing as oil cargoes from other regions, including Russian crude oil already in tankers on water, are coming in. Last week, government sources had indicated that India had 6 to 8 weeks of crude and fuel stocks, which would be replenished on an ongoing basis with supplies from other regions being increased. As refineries continue to process crude, produce fuels, and get more oil from regions other than West Asia, these stocks will keep shifting and the effective coverage would be extended. According to sources, the government and Iran and the Indian oil and gas companies are in touch with all international suppliers to source additional volumes of crude oil and LPG, even as the country is in a comfortable position to prevent any near term shortage of major fuels. In order to ensure continued availability of cooking gas to crores of Indian households, the government invoked emergency powers under the Essential Commodities Act to direct Indian refiners to maximize LPG production and ensure that all the gas is supplied solely to domestic LPG consumers and not used to produce petrochemicals. Over 80% of India's LPG imports come through the Strait of Hormuz. Natural gas supplies to some sectors in India have already been reduced in the anticipation of tighter LNG deliveries. Over half of India's LNG imports come via Hormuz. Government sources indicated that if the situation worsens, reprioritization of sectoral gas allocation may be undertaken to ensure that the critical sectors don't suffer for want of fuel. Some sectors can also switch to alternative fuels, they said. Domestic natural gas is allocated to various sectors like city gas distribution, fertilizers, and power based on priority list. Thank you for your attention to this matter.